Scalping the market. It sounds cool, right? You're getting in quick, you're getting out quick entries, quick exits. You're like a ninja. But here's the thing that no one actually tells you about scalping. Most traders who scalp, they usually end up over trading, over stressing, and losing sleep day in and day out because even when they are in their bed, they're still checking their trade. So here's the thing to understand about scalping. It's not about being fast. It's about being precise. If done the right way, you will be able to make a lot of profits. So in this video, I'm going to show you the best scalping strategy, which only requires a simple 5-step process. The first one being looking for consolidation, a breach, a two-legged test, a break of structure, and a retest. May sound a lot, but sweat not, I'm gonna walk you through it because it's very, very simple. So let's get started. Oh yeah, there's one more thing. Just make sure to hit the like button and subscribe if you haven't already. It's gonna be super helpful to the channel. I appreciate it. All right, back to the video. So the first thing that you need to understand about scalping is that your job when it comes to scalping, it's not about getting in and holding on to a trade for 100 pips or 100 ticks or 100 points. Your job is simply to look for a condition in the market where your strategy dictates, which I'm gonna show you later, that you wanna get in at that spot and get out at the next stop, okay? It's not about being sensitive in the market where you're just catching everything you see, and it's sure as hell not sitting down, looking at the charts and start firing away. It comes with a lot of patience. So scalping is not a chaotic casino, it's surgical, okay? Let's get that out of the way first. Now, I'm looking at the Bitcoin chart here and I'm on the 5-minute time frame. Of course, if you're scalping, you can go even lower, sometimes even the 1-minute time frame. However, I really would suggest being a little bit careful on the 1-minute time frame because sometimes spreads can get really high and the fees can also get really high. So my preferred time frame for scalping would be the 1-minute time frame. Now, over the years, the best approach when it comes to scalping is actually understanding this fact right here. The whole idea of scalping is just getting one small piece of the market movement in the market. And when are we able to easily predict this? Is when the market is trending, right? Because if we clearly know that the market is trending, it's gonna be very easy to predict where the market is gonna go, right? At this point in time, you know, the chances of it dropping versus the chances of it continuing is pretty low. Because we are in an uptrend, chances are there is still some steam in the market to continue going up. So just following this very basic understanding, you always want to be scalping when the market is trending. Because like I was saying, we are only taking a small piece of the uptrend. In this case, you know, if we're going up, we're just taking a small chunk of the move going up. What you don't want to do is scalp when things are choppy. If things are choppy like that, that's not a place where you want to be scalping, right? Because at any point in time, things may chop, turn around and go up further just because there's no momentum and there's no activity, there's no supply and demand in the market to, you know, continuously push price in either the upside or the downside. Our job here is not to figure out the markets, right? Our job here is to jump in, jump out quick. It's sort of like riding the subway. We know the subway is going from point A to point B, right? And we are somewhere in the middle here. We just want to hop onto the train real quick, get onto the next stop and get out. That's it. But we need to know that the train is moving. Because if the train is not moving and it's going this direction, that direction, you know, if it's going in this kind of route, then that's not the right train to be on, right? You want to look for a train where you know it's traveling from point A to point B and you're just taking, you know, one of the stops in the route. Hopefully that makes sense. So by understanding this logic, I'm going to break down the 5 simple steps that you need to take to be able to scalp the markets. So let's head back to the chart on Bitcoin right here. And I want to show you a setup that just happened recently, okay? So let's break it down from the top. So the first step in the 5-step process is to identify a consolidation. So right here on the Bitcoin, we have this kind of price action going on. We have a move up, move down. It's a trending market, right? And then here things starts to chop before making the next break. These are the type of consolidation you want to be focusing on. Okay, the consolidation can be in a channel form like this, or it can be in a range form. like this, okay? So in this case, we get a consolidation, and then the next step of the 5-step process is looking for a break. We have the break right here. The whole idea of a consolidation followed by a break is when things are moving sideways, that tells you there is bigger players in the market exchanging orders, right? They're happy with whatever price they're getting. And when there is over demand or oversupply, things start to spill over and the power shifts to one side or the other. So as soon as you see a consolidation followed by a break like this, that basically tells you the power right at that moment is going to the downside. So in this case, we have a move going down, telling us bigger players in the market right now, they're looking to sell. So having that said, we will then mark out the level in the market right around there. Once you have that, let's move on to the third step. The third step is pretty straightforward. You want to see a pullback into that area, but the way that you want to see the pullback coming in is in legs. Okay, what I mean by legs is basically swings. If we have a consolidation and a move down, there is a few types of pullback coming in, right? It could come in quick and drop, or it could come in multiple legs. This is one leg towards the upside. This is another leg towards the upside. This is a third leg to the upside. At a minimum, you want to see 2 legs going up, okay? And the second leg needs to be smaller. That's the rule that you want to follow. So if we zoom in and look at this right here, we are able to see 2 legs going back up. We see 1 leg and then the second leg. If you compare the 2 legs, the second leg is smaller than the first leg. So that's 3 steps done, okay? We are halfway through. So sorry for interrupting this video because I have an announcement for the first time ever on this channel. I'm gonna be hosting a live webinar next Thursday, and I'm gonna be covering the secret behind trading reversal. You've probably seen some of the reversal trading videos I have done on this channel, like this one and this one. But next Thursday, we're gonna do a full webinar around this. I'm gonna interact with you guys. If you guys have any questions regarding reversals, feel free to ask them during the live session. And I'm gonna show you all the steps that I personally take to trade reversals in the market. Okay, so this is going to be a private webinar. Make sure to register with the link below, and I'll see you there. Afterwards, you want to see a break in structure, okay? A break in structure just means, so what you could do is mark out a line right there. And as soon as we break down through and close through that guy, you want to join the retest, okay? So this is step number 4, waiting for the break to happen. Step number 5 is looking for a retest. So in this case here, we got our retest, and that would be our entry. So the way that this trade would set up would look something like this. Entries right there, stops at the recent high, which is the end of this pullback, and you would take this trade and you would hold on to this trade as long as the momentum is still there. What I mean by that is, remember what we were saying before? We're just joining a higher time frame move. In this case, we know the higher time frame is moving down because we are in a downtrend, right? And we're just taking a piece of the market, right? But how far do we want to take this piece depends on the momentum. If things start to slow down, that's where you want to get out. So if we track forward here, we can see price moving lower, pulling back, making the next lower high, making a new lower low. Did it make a new lower low? Did it make a new lower low? No, it stops here and it starts to struggle. At this stage right here, this would be where you want to exit the trade because things are slowing down. Now, obviously, I can see that things are continuing the move towards the downside, but remember what I was saying before. Our job as scalpers is not to hold on for 1,000 pips. That's something you want to do if you're a swing trader. If you're a scalper, you want to get in and out quick, fast, and precise. Okay, that's the key word here. As soon as things start to slow down, that's where you want to get out. So an ordinary trade like this would easily give you a 1.4R trade. Okay, let's round that up to 1.4R. Okay, so this happened on Wednesday, 23rd of July. Now I'm gonna show you a couple more trades around these times, okay, and show you within just a couple of days how much return can you actually get from using this strategy. And again, this strategy is actually from urbanforex.com. You really want to check out the courses there because it's a game changer. Okay, so right here we have the next setup. All right, now when it comes to consolidation, the first thing I would be able to see is this area right here. Things are holding grounds and we are also trending towards the upside. Now another thing to note about this consolidation is if we drag this to the left, it also coincides with a couple more highs, okay? And then once we have this break above those highs, you know, that's where the market is telling you there is demand in the market and the bigger players are looking to go for the buys. Our job is mainly to join the bigger players as things are moving up, okay? Now, if we look at this break towards the upside, your job is not to chase the market, right? Your job is to wait for a pullback to look for the entry. So right here, we already have the first two steps done. We have the consolidation and we have the break above, right? Next thing we're looking for is at least a two-legged pullback. So from the top here, we are able to see one move down, second move down, third move down, fourth move towards the downside. So here we have four moves towards the downside and we are at the SNR area. Okay, now let's wait for a break of structure, right? So we have this going up, pull back, going up, pull back, going up, pull back, and this is your last guy who started. Once this guy is taken out like so, that's telling you, okay, the momentum has shifted. Now let's look for our entry. Just like that, we have ticked off the third and fourth step within the process. So for a typical trade like this, you would want to wait for a pullback back to the guy who started, and that's where you would want to get in. Okay, how you would set up the trade would look something like this. I'm gonna clear this away and entries would go right here. Stops would go below the recent low. And in this case, you can actually just go for the recent high. Because again, we're not aiming for a lot of profit. As long as we can get 1.5 to 2R from a single scalping trade, that's more than enough because we can do this over and over and over again. So if we look at the recent high here and if we drag it all the way towards the top, this trade would easily give us a 2.2R trade. So if you tally up the numbers from earlier, we have 1.4R, which was just a couple hours later on. And right here, we have a 2.2R. Okay, so right now we are sitting at round about 3.6R. All right, so let's have a look at this next example that we have here. Okay, so this happened just one day prior to the first two examples. We are looking at this on a Tuesday, and we are looking at a consolidation that's going on right here. Now, if you focus on this consolidation and you look at the break that happened, okay, this break is a huge break, and it's actually not just breaking out of this small consolidation going on here. It's actually breaking out of this huge range. When it comes to something like that, that tells you a lot of players are in the market trying to push price up. Okay, institutions, banks, governments, they're all trying to push the market further up. When that happens, your exit would be a lot further. Okay, I'm gonna show you exactly what I mean by that. Going back to the 5-step process, we have the consolidation and we have the break. So those two things are done. So let's just focus on this area right here. Now, third step, looking for a two-legged pullback. Okay, so we have a two-legged pullback coming in here, although the first leg is coming in pretty hard, pretty strong. First move coming down very, very strong. And then the second leg coming down is visibly showing a lot of weakness. Okay, now what happens after that? We have the guy who started the second move towards the downside being completely taken out. So this is the move that took out that guy who started towards the upside. Once we have the break of structure, we only need to look for a retest. Okay, as simple as that, you got your 5-step process done. So the retest would be right around here. This will be where you want to be getting in at. Stops just go right there. And remember what I was saying, you can hold on to these type of trade much longer until you see the momentum fizzling out. So we see the uptrend continuing its move from here, making higher highs, higher lows, higher highs, higher lows, higher highs, higher low, and then here things starts to chop a lot more. Notice that before things were not chopping. They're not chopping a little bit, and look at each swing towards the upside. It's getting smaller and smaller and smaller, and things are chopping a lot more here. Once you see that, that's where you want to be getting out. Because taking a scalp trade like this and having a huge runner is not something you see every day. So when you do see something like that and you do see the momentum slowing down, that's a sign where it tells you, okay, remember the train analogy that I had earlier on? That's the station you want to get out of. So if let's say we get out right there, this would be a trade that would give us a 3.3R profit, okay? A huge winner. Adding to the pool of the profits that we had earlier, this would put us at 6.9R return. Huge profit. And this is exactly what we teach at urbanforex.com. So if you like what you're watching so far, just imagine what an 8-week course is going to do for you. All right, so there's actually one more trade I want to show you which happened just the day before. Okay, so far we have looked at 2 trades on Wednesday, 1 trade on Tuesday. Let's have a look at a trade right here that happened on Monday. So on this day, we have a small consolidation right here, and we have a breach towards the upside. Now, one thing that you can do is when you look at consolidation and the break towards the upside, have a look at where the break actually also occurs, right? It also breaks above these highs, as well as these highs here, right? And if you extend that out, that becomes your SNR, your support and resistance area, right? Okay, 2 steps done. Let's look at the 3rd step here. 3rd step is looking for your 2-legged pullback at a minimum. We have 1 leg pullback, a move towards the upside, and the 2nd leg here, remember the rule, making sure that the 2nd leg is smaller. In this case, it is smaller, showing that the momentum of the pullback is slowing down. That's what we need in the market, okay? Now, where's the guy who started the 2nd move? He's sitting right around there. And did we get a structure break? We did get a structure break. Structure break happened right there. Once you got the 4th step done, purely look for your retest. Okay, so we have our retest happening right around here. Entries would go right around there, stop loss below the low. And for a trade like this, we can just target the recent high. Okay, and for something like this, we are looking at a 1.6R return. Now, some of you guys may also be wondering, hold on, Lucas, you were just saying, if we have a breakthrough, a big level, chances are things could go a lot higher. Is that the case here? It's actually the case here because we're not just breaking out of this small consolidation alone, we're also breaking out of these highs as well as these highs. So if you're taking that into account, you can actually hold on to the trade a little bit longer. What you want to do is use some risk management, which means as the trade performs, you want to move your stop loss to break even, okay? So looking at something like this, what you can do is follow the uptrend and see when does the uptrend fizzle out. And by fizzling out, I just mean not making any more higher highs and higher lows. So we have a move towards the upside, a pullback, a move towards the upside, a pullback, still making higher highs and higher lows. Next higher low here, did it continue to make higher highs? No, it didn't, right? Things start to fizzle out and then starts to make lower low. This is exactly the point where you want to get out. So one more time, if I take my profit marker, take it all the way towards the high here, we are looking at something around a 5R trade, or to be more precise, a 4.9R. Now, if we add this to the pool of returns that we have, now we are looking at 11.9R return. 11.9R return within just 3 days. And if you're taking 1.5% per trade, you're looking at a total of 17.85%. Okay, that's a huge return. But I want to tell you that that's not something impossible. With the right knowledge, with the right concept, with following the right techniques, that's something easily achievable. So it's actually that simple to scalp the markets. The main thing that you really need to focus on is knowing what you're looking for in the market. 90% of the time, the market is going to show you things that you do not need and you do not want to see. You just need to be ready when it shows you what you need to see, following the 5-step process we have just went through. So I hope you liked this video. If you have a friend who's also scalping the markets and need a strategy that's consistent enough to make them profits day in and day out, send this video to them. And all of this that I'm talking about here, everything is derived from the courses at Urban Forex. So if you haven't checked that out already, make sure to check that out through the link in our description below. Otherwise, I'll see you on the next one. Cheers. Bye for now.